If you are receiving Social Security right now and you have never personally logged into your My Social Security account and audited every single year of your 5 year earnings record, you are almost certainly receiving less money every month than the government owes you. And the SSA is not going to call you, write you a letter, or send anyone to your door to fix it. That is what this video is about. Stay with me because the single most important step in this entire process, the one move that can permanently increase your monthly check without filing a new claim, without hiring an attorney, and without a single phone call to a government office, is coming before this video ends, and you cannot afford to miss it. Right now, buried inside the Social Security Administration's own records, there are millions of retirees and current beneficiaries walking around with earnings record errors they don't know exist. We are talking about years where your income was either never reported by an old employer, reported under the wrong Social Security number, or entered into the system as a flat zero when you actually worked and paid into the system. Every single one of those $0 years that replaced a year when you actually earned income is dragging your monthly benefit down permanently, and the SSA is not legally required to notify you. They process what is in their system. If their system is wrong, that is your problem unless you act. And here is the part that makes this so urgent for everyone watching right now. The mechanism for correcting your earnings record, the federal form that forces the SSA to reopen your file and recalculate your benefit using accurate data, is one of the most underused financial tools available to American seniors today. It is called Form SSA 7008, the Request for Correction of Earnings Record, and if you have never heard of it, you are not alone. The government does not advertise it, financial advisors rarely mention it, and the SSA will not proactively identify the error and hand you the solution. You have to demand it yourself. And if you are already receiving benefits, fixing an earnings record error does not just correct the historical record. It can trigger a permanent upward recalculation of the monthly check that hits your direct deposit account for the rest of your life. Every dollar you were ever shorted because of a missing or incorrect earnings year is money you can fight to get back, and Form SSA 7008 is the legal instrument that starts that fight. Now, before I walk you through exactly what to look for inside your earnings record and exactly how to use this form to challenge the SSA, I need to address something that affects a completely different group of retirees who are being silently drained of money they do not even know they are losing every single month. If you are on Medicare Part B right now and your income 2 years ago was above a certain level, even if that income was a one-time event, a retirement distribution, a property sale, an inheritance, you may be paying a Medicare surcharge called IRMAA, the income-related monthly adjustment amount, that you were never supposed to keep paying. In 2026, the standard Medicare Part B premium is $202.90 per month. But if your 2024 income exceeded $109,000 as a single filer or $218,000 as a joint filer, the SSA has automatically added a surcharge on top of that. We are talking about an additional $81.20 per month at the lowest IRMA tier, scaling all the way up to an additional $487 per month at the highest tier. And because Medicare uses a 2-year look-back, meaning your 2026 premiums are based on your 2024 tax return, hundreds of thousands of retirees are still paying elevated premiums for income that no longer reflects their current financial reality. They retired, their income dropped. But Medicare is still billing them at the higher rate because the system runs on a 2-year delay, and nobody at the SSA is going to tell them there is a legal appeal process that can force an immediate recalculation. That process exists. It is called a life-changing event appeal, and it is filed using Form SSA 44. If you retired in 2024 or 2025, if your income dropped because of divorce, because a pension ended, because a spouse passed away, or because you simply stopped working, you do not have to wait 2 years for the system to catch up automatically. You can file Form SSA 44 today, attach documentation of your current income level, and the SSA can reduce or completely eliminate your IRMA surcharge going forward. Some beneficiaries are recovering hundreds of dollars per month by doing this, and virtually none of them knew this option existed until someone told them directly. Consider what those numbers actually mean in practice. If you are paying the first tier IRMA surcharge of $81.20 per month and you qualify to have it removed, that is $974.40 back in your pocket over the course of a year. If you are paying the second tier surcharge, you are looking at recovering over $2,400 annually. And if you and your spouse are both on Medicare and both paying IRMAA, those numbers double. Every month you do not file Form SSA, 4-4 when you qualify is a month the government keeps money that should be funding your retirement, and the SSA is not going to tell you about this form. They will keep billing you at the elevated rate until you challenge it in writing. Now, I told you at the beginning of this video that the most important step, the one that can permanently increase your monthly direct deposit and that most beneficiaries will never take, was coming. Here it is. Before you can dispute a single thing about your Social Security benefit calculation, before you can identify whether a $0 year is costing you money, before Form SSA 7008 can do anything for you, you must first see your actual 3-5 year earnings record exactly as the SSA has it on file. And the fastest and most precise way to do that right now, today, using any smartphone, tablet, or computer, is through the My Social Security online portal at ssa.gov. Here is exactly what to do. Open your mobile browser and go directly to ssa.gov. Look for the button that says Sign In or Create an Account. If you already have an account, log in now. If you have never created one, create one today before you do anything else. The process requires identity verification, but it takes most people under 10 minutes. Once you are inside your My Social Security account, you are looking for your Social Security statement. Inside that statement, there is a complete record of every single year of earnings the SSA has on file for you going back to the very beginning of your work history. You need to review that record line by line. You are looking for years where your earnings show as 0 when you know you were working. You are looking for years where the number is dramatically lower than what you actually earned. You are looking for gaps in the record that do not match your own memory of your employment history. Any year where the SSA shows you earned nothing or shows an amount far below what you actually made is potentially suppressing your benefit calculation right now. Remember, Social Security calculates your benefit using your highest 35 years of earnings. If the SSA has zeros or artificially low numbers filling some of those 35 years because of employer reporting errors, because wages were filed under a slightly different name or SSN, or because a company simply failed to report your income to the government, your benefit is being calculated on a corrupted baseline and you are being underpaid every single month. Once you identify a discrepancy, you download Form SSA 7008 directly from ssa.gov. You complete it by identifying the specific year and employer, you state the correct earnings amount, and you attach supporting documentation. That documentation can be W-2 forms, federal tax returns, old pay stubs, or employer records. If you do not have the original W-2, you can request a transcript of your tax returns from the IRS using Form 4506T. The IRS keeps detailed archived records that often go back much further than most people realize, and those documents serve as corroborating evidence that can force the SSA to update your record. Here is something critical you need to know about the timeline. There is a general statutory limitation on earnings record corrections. The standard window is 3 years, 3 months, and 15 days from the end of the taxable year in question. But this deadline is not the end of the road. Federal regulations under 20 CFR Section 404.822 list specific exceptions that allow corrections far beyond the standard window. These exceptions include cases where the error was caused by an employer who failed to properly report your wages, where the SSA made a mechanical or clerical error entering the data, or where you can demonstrate through your own timely filed tax return that the income was earned and reported. In practical terms, This means that even if a $0 year in your record is from a decade or two ago, you may still have a viable correction path if you can produce documentation and the error falls under one of those exception categories. The SSA does not volunteer this information. You have to know to ask for it and know how to demand it using the right form. Now, let me be direct about who is most at risk right now and who needs to act with urgency. If you worked for multiple employers throughout your career, especially in the 1970s, 1980s, or 1990s, when paper-based reporting systems were common and employer W-2 submissions were not always perfectly captured, the probability that at least 1 year in your earnings record has an error is significant. The SSA processes over 250 million W-2 wage reports every single year. Even at a 99% accuracy rate, that still produces millions of errors annually. Those errors land in real people's records and directly suppress real people's benefits. And the beneficiaries most likely to have historical errors are those who worked for small businesses, changed jobs frequently, worked seasonal or contract positions, or had periods of self-employment that may have been inconsistently reported. If any of that describes your work history, your earnings record deserves an immediate audit. And if you are currently working while already receiving Social Security benefits and you are under your full retirement age, there is one more mechanism working against you right now that you absolutely must understand. The Social Security earnings test currently withholds $1 of your benefit for every $2 you earn above $24,000. $480 in 2026 if you are under full retirement age for the entire year. That feels permanent. It feels like money you simply lose. But here is what the SSA will not emphasize when your checks are being withheld. Those withheld benefits are not gone. The moment you reach your full retirement age, the SSA is legally required to recalculate your benefit upward to give you credit for every month of benefits that were previously withheld under the earnings test. That recrediting results in a permanent monthly benefit increase for the rest of your life. It does not come back as a lump sum. It comes back as a higher monthly check going forward. And it happens automatically, but only if your record is accurate. If your underlying earnings record has errors, the recalculation at full retirement age will be based on corrupted data, and you will still be underpaid even after the recrediting process runs. This is why auditing your My Social Security earnings record right now, regardless of whether you are currently collecting benefits, regardless of your age, and regardless of whether you think your record is probably fine, is the single most consequential financial action available to you today at no cost and with no professional required. You have everything you need. You have a smartphone or a computer. You have access to ssa.gov. You have the name of the form that can force a correction. You have the corroborating document strategy using IRS Form 4506T. And if you are on Medicare and your income dropped after a qualifying life event, you now know that Form SSA 44 exists and that it can eliminate a surcharge the SSA has been quietly collecting from you for months. None of this information was going to find you on its own. The government was not going to send you a letter explaining that your earnings record might have errors. The SSA was not going to call and tell you that your Medicare premium surcharge can be appealed. You had to come here and find it yourself, which is exactly why what you do in the next 60 seconds matters. Click the subscribe button right now. Every week on this channel, we expose the rules, the forms, the programs, and the federal mechanisms that directly affect your income as a Social Security recipient, a Medicare beneficiary, or a retiree navigating the government benefit system. These are the updates and the strategies that no agency is going to hand deliver to your door, and the difference between knowing them and not knowing them is real money leaving your account every single month. Subscribe so you never miss a broadcast. Then share this video right now with every retired family member, every friend receiving Social Security, every neighbor on Medicare, because the person who most needs this information is almost certainly not going to find it without someone forwarding it to them directly. Go to ssa.gov today, log into your My Social Security account, pull up your earnings statement, and start the audit. If you find a discrepancy, download Form SSA 7008 and file it. If you are paying a Medicare premium surcharge and your income has dropped, download Form SSA 44 and challenge it. Take these steps now because every month you wait is a month the government keeps money that belongs to